All right, video 2 of 3 on 9/29. This is our last session in September. You know, the worst month of the year. When we broke records, I'm being sarcastic. Okay, giant gap, DXCM. So I gave people homework. Nobody came back with an answer. I said, if there is no change in the fundamental thesis of this company's business, this was a blind buy the dip moment. And I marked 3 times where price to sales was 11, and look at the rally that ensued. This time it's 7, so it's even cheaper from a growth perspective. It is a growth story. Even on the quarterly, I mean, it's not so bad. So it's a buy the dip moment. So if somebody bought half their shares on this dip, you did right, and you still have that opportunity. So this is an aggressive sell a put to own shares. 50%. Let's say I wanted to own 500 shares of this company over the long term. I would sell 200 puts, 2 puts, like with extreme confidence every week until I get assigned. And then I would own shares for the long term, only not even half of a position. So I would have the opportunity to double it and then some. That would be my strategy with this one. Or just buy half your shares and sell covered calls against them right away. ELF looks like it's solid base, but my apprehension is that it rallied so far beyond its like what's normal that there might be some more sellers on rallies. So good investment starting position. It's on my list of things to do. I would comfortably sell puts to own shares below. Everything I said at DXCM is the same. Here I would say rallies into 138 and 140 is going to be met with a lot of sellers. Now notice what's on my screen. Credit, the word credit. Okay, so that was a trade setup. Credit call spread to short it up here with a debit put spread out in time. So if somebody did these 2 positions, they made money out of thin air because this money paid for that one and that one paid fully. So now we do the opposite, credit put spread with a debit call spread kind of a scenario because it's fallen into a base. So now you would do a credit put spread and then add to it a debit call spread. Avoid earnings. So this one will be 35 days tops, and this one will be 50 days-ish. The opposite of this. End phase, I wouldn't touch it at all. Someone explained to me how you can lose this much sales and nobody's worried. So if you can answer that question, go for it. I traded it long on the way down, and I said it's a no touch anymore because the earnings report reaction was positive, and they had lost 57% of their sales year over year. If you can't explain that logically and say, you don't understand, Nick, because of A, B, C, D, I wouldn't touch this company. Solar had its moment. It had all the advantages from the government, and they still can't make it like a thing. I have solar. I love it, but I live in California, and I don't have hail, so I don't understand this. That's very weird. FCX, this is an exit point, not an entry point. Look at it. Does this inspire starting points? No. And if you can't book profits from rallying from here to here, if you're a trader, I don't know what to say. This here is an NOPE, not an obvious point of entry. Nope. As an investment, you freaking missed it. Buy the next dip. FSLY. So FSLY, we used to trade it, not anymore. You see all these blue lines? As you approach them, these are going to be concrete descending falling walls. Support zone, nope. That's going to be resistance zone now because that's how it works. Prior support becomes forward resistance. Look at it. They needed to hold 12 and they didn't. Now, this was a buy shares and hold if you believed in the company. Sell puts if there was premium. I don't know if there is. If you still want to go long, I would implore you to only take half of a position or sell puts every week to get assigned your shares. And just like Beto comments, make sure you have 31 days until the earnings. So this shows you why it's not an emergency. If you waited, if you didn't buy it at 5.6, you shouldn't panic buy it at 8. Just buy the next dip, split the difference, 6.8, 6.7. FUTU, same comments. Now you love it? I don't know what they do. Wow, this is a pretty good P&L. Is this a trading business? So fintech. Okay, so this is like PayPal and stuff. Yeah. Good job if you stuck with it. That's a solid P&L. If it's not based in the US, I would avoid this. This is just too good. Hong Kong. Find out if this is audited from non-Hong Kong companies. I'm not saying they cheat in Hong Kong, but that's just too perfect. Technically speaking, this area is resistance from here on to 112. But amazing P&L, good trend. Buy the next dip. Look at it. Every rally dips. So how about we do this? Let's take the judgment of is it real or not, and do this. Okay? Watch. Spike, spike, spike. Let's just do that. Okay. Does this show up on all time frames? No. Why not? Everything else shows up on all time frames. Why does this not translate from this time frame to this time frame? Okay, I would buy the dip in this one. I would not touch it up here. GE, all in. I'm all in. No, I just shorted it actually. Actually, I've been short. I sold calls way out to December, and they're still working. But I think I added a layer of put spreads. I can't remember exactly what. My beef with it is that it's going up against decades worth of resistance. So it's not a line in the sand. This thing is from 2008 and 2000 levels. So clearly the machines, the people now trading, they look left and they say, ooh, it's a breakout all-time high. The bears are in trouble. Well, the bears have been shellacked, but I still made money on it by selling calls and not buying puts anymore. This will have a crash. I'm confident. It's just a matter of time. Now, don't follow me into this by shorting it outright. I sold calls way up, and just look at this. What this company is now. GE has been running on slicing off things, so they call it streamlining the business. Basically, it's shrinking to grow, but it's still shrinking. So the valuation is through the roof, I think, and maybe better said, the expectations are through the roof. I don't think I'm smart enough to evaluate it because I really don't know what's left. How do you justify this cut in sales? My experience is when you carve out a company, you carve out everything by hindsight. So the P&Ls that are shown here don't show any old businesses that don't belong in this business. So how do you justify a drop of 40% in sales and not be worried about it for the future? So just like Micron, I put it in the penalty box. With Micron, I had the same beef, and I said, the expectations may be outgrown, the overblown. That's what I'm saying here. The expectations may be overblown, so it is a good short attempt. So easy to say, I would not be long GE here. GE Healthcare. You see this one is a clean P&L because it has nothing but the healthcare part. I don't short it, although it is shortable. This could be at 85 or 86 in the next couple of weeks. If it's not, then it's at 104. Play whichever side you want. Technically speaking, I would word it, if they don't get up to 96, it's easier to get to 85. Fair enough? If it's not up at 96 or 7, it's easier to get to 85. In fact, if it does get up there, so this is going to do this. If not, it's going to pop and drop. So if you wanted to go long, wait for a dip. You either catch it here or you catch it here. Either way, you pay less than what you're paying now for a call. GEV, holy cow. So if you're the same person giving me all three GE tickers, why don't you just buy everything if you're looking to go long? I mean, I don't know what to say. This one I know nothing about. What is GEV? What does it do? Services generate, transfer, convert, and store electricity. Oh, alternative power. So yeah, this one is a black box to me. Do what you want. The chart says don't touch me, but you look left, there's nothing there. So I have no reference points. How about I say, if I'm an investor, wait for a dip. It's not coming, Nick. Okay, then buy it. What am I to say? Buy half of it, and if it gets cut down to 192, then you add the second half maybe. It's not for me. I don't know anything about windmills, so do your homework on that one and see how much the price to sales are or something like that. Gold. Did you mean gold? Or what gold did you mean? You probably meant Barrick gold. I would be out of every gold company. Great company to buy on the dip. We had it on our buy the dip multiple times. Gold has never been higher. This one is nowhere near where it's never been higher, so it's not for me. It's the same reason why I don't pile into MSTR. Gold is in a breakout mode, and it's probably going to drift lower just from a chart perspective. Over time, gold will be higher. Why isn't this one at its all-time highs? It's trying to break out and get to 23, so if you want to ride that, fine. Otherwise, buy the dip into 19. Okay, now I lost my place. I have to go hunt it. 1 second. Alphabet. I don't like how it's trading. We did it perfectly. Look at the white lines. You can't get a more perfect forecast, right? Okay, so I have a lot of lines here. Let me verbalize them for you. They lost a neckline. They're trying to recover. In fact, they lost 2 necklines. And listen to the English words here. First neckline they lost is up here, and they're trying to recover it. So losing 172 gave you a target of this. This neckline was satisfied completely here. Now they've lost this one, and they're trying to recover. Losing this one gives you a target of this one, which is the most heavily traded level for a year. So in the reality, this is targeting below 140, 136 to be exact. Okay, they can erase that by getting up to 176. So the way I would word it, as long as they're below 176, there's a scenario that takes it to the high 130s. I'll say it again. As long as they're below 176, there's a scenario that takes them down to the high 130s. We're going into an earnings season. Their earnings are going to be solid. It's an amazing company. There's probably a buy the dip moment inside that. This rally of late is super strong, but it's trying to play catch up. Markets are at all-time highs. This one isn't. So that's the catch up trade. Above 169, you could get a burst that gets you to 184. And that's how you get above 176. So you need a strong push above August's highs. That's the statement there. I would not like to own calls. Shares are fine. I would sell covered calls against them. Let me show you the lines in here. This, by the way, is going to be part of the video on Sunday. We have the struggles in the Middle East, where I'm from, are not the same as the usual. They're not the same as the usual. I get news directly from the Middle East, and every news bit has at least 6 to 8 nations mentioned in it. That is not the normal scuffles. Okay. Side comments. All right. Halliburton. This is not it. That happens every time. Halliburton. What's going on? That was weird. What the heck was that? Okay. Short-term comments, 29 to 29.40, super strong sellers. You need to take out 30.8 in order to avoid it. Let's zoom back out. What is going on with Halliburton? Data feed. Okay, so we're going to stick with that time frame. I'll zoom out this way. Yeah, they're selling rallies. Just copy paste. You'll see what I mean, right? So rally from here to here. Whoops. So the rally from here, the path from the dip to the rally down the lower. Has that happened before? Yes. So maybe it's happening again. We'll put it this way. So what I'm saying is the next rally, doubt it. Trade accordingly. I'm going to have to go back down. Those tickers that are weird, if I scroll down, it loses it because it's not the ticker we were on. Okay. Honeywell, great company. It's global. It's industrial. The industrials had the mother of all rallies this week. What is going on with TradingView? I'm locked up. I can't do anything. Okay. So I'm stuck in one time frame. That sucks. this here is not an obvious entry point. Between here and 213 is an exit point for me. Rebuy on a dip at 204 or lower. So it's not out of the if the market's correct, this one can be at 188. But the things that will require it for to be there is a full-blown correction in the market, like the August and September dips that don't get bought out in 3 days. So the industrial had an amazing week. Let's see if they can follow through. Otherwise, buy the dip to 203 or 200, or better yet, sell puts to own it below 200 with confidence. Solid company, nothing against it. Humana, I believe we bought the dip, and that's as much as I know about it. I don't trade it. I will never trade it again. The options are super illiquid. We just sold a put spread, and it's just taking... Okay, so when I sold the put spread, I positioned it down here, and I drew this box, and I told you we were here, and I told you there's a chance it's going to come down to the bottom of the box. I literally said that if you were in the live room, and look what happened. So if somebody panicked here, they didn't read my note, and they took a loss and say, oh, this trade sucks, Nick. No, because you didn't read the notes. I totally knew that we would be there. And it's like, why didn't you wait? Because we can't be perfect with our entries, and we're making money now, so who cares? That's the point of doing credit spreads, when you know the general vicinity of the price path and you set a trade that would survive the first worst case scenario. Now we can come back down and retest it and get more in trouble. In fact, I personally will exit mine soon because I hated how it trades. That you can't get fills, you can't get quotes, it just sucks. IWM, I'm not going to answer much here because I have a special video for these, so we're going to skip it. I'm short the IWM. I would short rallies too, to put it bluntly. JCI, this here is an exit point. Sadly, I can't jump out in timeframes, and TradingView is locked up. I'm scrolling, nothing is happening. Let me change views. Maybe another view would work better. What is this view? Same ticker? Okay, we can do here. JCI. Okay, let's work on this view here. Maybe this works better. Let's change. What's today? 9:29. There we go. There's still a lag here too. This here is not an obvious point of entry for JCI. If you look left, you're going into a prior fail. So it's a good trend. It's a good breakout. So you could get to 90, but just buy the dip inside of that. If you're long, you can stay long and trim however you want. Okay, so that's JCI. Let's go down one. JP Morgan, I would short. I did not reshort. We've played with it quite a few times. We shorted it successfully. Did I short it? Did I reshort it? I don't know. Anyway, if it jumps up to 215, I would re-engage short. The short I would do with it is a bear call spread, debit put spread, or sold call bought put. Depends on your risk appetite. And no, I'm not shorting its fundamentals, but I know that it's going into earnings, so I'm not going to do anything until the earnings reaction. KMX, I wouldn't touch this stock, and if somebody bought the dip on KMX, good job. This here is not an obvious entry point. So now there's a chance they want to revisit 70 just to get this out of their system. Look left, it bounced exactly where it needs to. So here's the statement off of this. If for whatever reason, and I honestly say that, for whatever reason, you lose 68, good Lord. This thing is going probably to 54. Okay. That is not a forecast, so don't buy puts or don't short it. Say Nick said it's going to 54. If it loses this line, which is very, very, very hard to lose, the first sign would be losing 73, 74. Warning. Because losing this target is below that. You understand this? So let me put it. I don't trade this stock, nor will I ever. It seems like it's a GME kind of stock. Okay, so this one is warning number 1. And the target, if you lose that one, let's say is this much. It's actually more, but let's go with this much. Look at where it's at. The target of losing this would trigger that. And if you take these two and you copy paste, whoops. You see the chain of events that can happen. This is if. That's a warning. Don't buy puts for that. Okay. What you should know also that this is a catalyst for the moon, and this is a level of resistance zone here. So this should give you enough to actively trade it. Okay. Kroger, one of those really wild charts that trades like Tesla, and you look at the P&L, like couldn't be anything further from the truth. So up here, not an obvious point of entry. I don't understand how it trades this wildly. Just you should know that something else is in play. Technically, a chart that looks like this, if you go above 59, you're going to 70. What are the odds of this one? I'd bet against it. So the way I would trade this, if it goes above 59 and it bursts, I would short it on the burst. That's how I would do it. If I'm long, I would trim and leave runners on. Lily, I don't trade Lily. You know me. Technically, it needs to get back to 920. Otherwise, it's going to 820. Those two blue are still there. If you don't come back to 920, you're going there. See, those two blue arrows did not play out immediately, but they're still there. In fact, 820 is doable, if not 700, but over months and months and months. The P&L says it shouldn't go there unless the markets are crashing. So if we have a correction in the market, you're going to get much better prices on Lily. So don't be a hero, Billy. Get it? Whoa, look at what I just did. You know, a reference to the 90s or 80s. Billy hit, jeez, different, next level, Nick. That's next level dad joke. LMT, talk about next level. Holy moly. So we took a short on LMT. It went red, went green, and now it's back to red. I'm still in it. It's a put spread. It was one of two. I like the company fundamentals, but it's rallying on war. So here's my... If you tell me this is a war company, and it's not, it has a war element, but it is a war company. That's how the market treats it. That's how it is. And the market doesn't care about the war. I think those should be mutually exclusive. So one of these two is going to end. We either have a war or we don't have a war. In which case, if we have a war, this one should drop. And if we don't have a war, this one should drop. You see the concept? It's not like the fundamentals are getting so much better now. So it's trading on something from the future. That's a call from Lebanon I have to dismiss. So I'll call them after. So that's my problem with it. If it's, just think about the logic. If it's running on war and we don't have a war and the market is correct about assuming that there's no war coming, then okay, it's overblown. And if we actually have a war, the market will care and all stocks will fall, including this one. Lam Research, buy the dip moment on Lam. I haven't seen a dip in so long. Okay. Support zone extends from 815 through 775. If you have a big enough account that wants to buy shares, you should have a big enough account to make money like gold by selling puts every week until you get assigned, or every month. It depends on how active you are, and you don't even need to be long here. So I would suggest that if you were going to buy 100 shares or more, I would look into a stock replacement strategy. We discuss those in the live all day, every day. Join us if you're not a member. LULU, we went long on dips and I would be out. It's going into a prior fail. It looks like a breakout, yes. You look left, there's a mountain of sellers waiting. So yeah, it could get to 295. Okay, so 1 second for a second. I need to message them here. Message, can't talk right now. I'll call you back. Okay. I love it. They have pre-packaged responses. 290 to 297, there should be a bunch of sellers. Buy the dip. In fact, it may come down to 270. So I said to sell puts or put spreads to go long, or if somebody bought calls, I will be out. As a trade, as an investment, you know, LULU is going to be fine. It's almost like Apple. Its clients think it's the best and they don't mind overpaying. So, okay. They're going through a major change in their booking process, so be careful. I don't like airlines to get all together, and I like this one the least. I used to fly it almost exclusively decades ago, and then now I don't even look for it. In fact, I exclude it from my searches. That's how much I don't like it anymore. And now they're changing the way that you board completely. And some people, the only reason they're on it is for that. Like you can sit together where other airlines are hard to sit together. And now they're going by way of the other airlines. And I think they're going to make you pay for bags and all of this. Not for me. Base below 26 is solid. If you got long, below 28, 27, you're golden. Don't look at the chart. You're in it for an investment. Don't look at the chart. As a chart, this is not an obvious entry point. Solid support below 28. So if you're selling puts below 28, solid. LVS, not an obvious point of entry. So anybody that's coming to me with a ticker like this, I would like to ask you here, what are you asking me? Are you asking me, can I go long? I'll say no, because you should have gone long below 42 or 40 or 39. No, you don't go long here. Are you looking to short? You could. It's going into a resistance zone, but 17 days from now we'll report earnings, and that's just, for me, I wouldn't touch it. You say, but Nick, it looks good. Okay, you missed it. Admit it and move on. Put an alert at 45. Wake me up when it goes back to, oh, it'll never be there. Look how high it is. It was there 2 days ago. 3 days ago, it was 42. Now you want to buy it 20% higher. It just doesn't make sense. It's going into a prior fail. I wouldn't touch it up here. Meta, I wouldn't touch it up here. Definitely don't short it. This company has an unbelievable P&L now. My personal feeling is that's a scam. I have proof. We've discussed them many times. A scam from a retail perspective. Everything I bought off of Meta was a scam. I mean everything. Nothing was what it's advertised, and if it came, it's either the wrong thing, something completely junk. And as an advertiser, I'm getting scammed. I know it. I have proof. Too long to explain, but it's proof. The advertisers are going to get scammed. It's a matter of time before they get caught. Having said that, their P&L is amazing. And on top of it, they're telling us they're building this whole new area, the metaverse. Where is it? But anyway, they're building it, and that's going to bring new income? Holy crap. How can you short that? Stay away from it. Buy the dip with confidence. MGM. So Caesars and MGM are doing well. This one, the breakout was from here. Let's give it, you can have $4 or $3. So you could be headed to 41. I think this red box, look how accurate it was here. I didn't draw it before. I drew this box before this rally, but I didn't take it off. It's based on these candles, these 5 candles. Look how accurate it was, and they're coming into it. So what am I saying? If it fails here and holds and come back and take that out, it probably goes to 44. So if I'm not long, I could get long, but I need to leave room for a dip. 3M. Last thing I remember is we bought the dip at some point. I wouldn't touch it here. Why is this P&L giving this chart? Look at the P&L shrinking, for fudge's sake. It's shrinking, and the losses are mounting, and it's doing this. Can you explain it? No. It's the same as Coke and Pepsi and all of these staples that are going through the roof. This here is most definitely not an obvious point of entry. In fact, this is shortable, but I wouldn't touch it. It's not very liquid. So we went long on a dip. I remember this one in the 90s, and we got in trouble like if we didn't time it right. And this here is not for me. What are you asking? Permission to book profits? Permission granted. Molina. I've heard the name. I don't remember the ticker. Okay. Can't tell you anything. You have sellers above, buyers below. If you take out 322, lose 322, you're going to 295. If you take out 365, you're going to 392. Maybe. You're stuck in the middle. There's no decision right here from the chart. Merck, you better not lose 110.5. Why? Because the target of that is like 94. Mind you have a ton of support around 105. So the best entry would be as close to 105 as possible. Having said that, for the last 2 months, you have solid floor at 111. You shouldn't lose it. Just like you couldn't take out 120, I don't think, without a headline. So these are the stocks that do get headlines. Every day is like an earnings report potential. FDA this and FDA that. So you're stuck. 120, 111. 120, 111. You get long towards 111. You get out towards 120. And it's shortable if it gets to 123. It's a sell. It's an exit. We bought the dip in this one here. There's nothing to be done. You're stuck in inside of like, look left. There's a bunch of action right around these ticks. So 66 or lower, super strong support. 78 or higher, strong resistance. If you take out 77, maybe you have enough energy to go to 86, and that would be an exit point. As an investment for the long term, if you bought the dip with me, there's nothing to do. This was MRVL, not Marvel Comics. MRVL, tech company, I believe. Microsoft is always a buy the dip stock. Best company on the planet right now. The largest company that has the best, like, the choice between owning Microsoft forever or Apple forever. I wouldn't even blink. I wouldn't even think about it. I wouldn't look at a chart. Microsoft. Forget Apple. For as long as Tim Cook is in charge of Apple, forget Apple. This guy is killing the company a little bit at a time. This company is firing on all cylinders. Buy the dip. These blue lines are not a forecast. It's a warning. If we drop below 426, we come down to the 418s. But that's not going to happen all by itself. Now the problem is around 436. If we get there, it's an exit spot for short-term traders. Okay? Sellers are above 440. All these wicks, but that's where the opportunity is, and it's lagging the S&P. The S&P is breaking records, and this one isn't. Something wrong with that. We can talk about it Sunday night, tonight. Micron, finally, so history lesson with me and Micron. I hated it up here, and I don't hate it down here. In fact, I said, show me, don't tell me. Everybody told me why Micron deserves to be up here. I said, you're wrong. And everybody now is showing me the reports in Micron, and I'm saying, yeah, I told you, show me. Now they have 3 good, solid quarters back to back. They've had that before. So if I'm not long Micron, I am not getting long here. You should have bought the dip where it deserved it. Up here, maybe. They're improving, but they're not awesome. So let me say it differently. If Micron is at 140, NVIDIA is higher too, and I like NVIDIA better as a company. So, and they go hand in hand. I don't think there's a future where Micron is rallying without NVIDIA or Microsoft. So why would I want to bet on somebody that's inconsistent? This one is inconsistent. 3 quarters ago, they had negative gross margins. That's pretty scary. So I don't think NVIDIA has the potential for that scenario. So choosing between, so dollars that go in here can easily go in NVIDIA and do as well, if not better, in downturns or in better times. So technically, I wouldn't short it, but I wouldn't jump into it, but just because of the report. For the report, you needed to go long with confidence into support. If you believed it, then you should have gone. If you loved it up here and you didn't go long here, you don't need to go long here. Or actually, you need to revisit the way you trade or invest. If somebody wanting to buy here or was long here and sold here and didn't buy here, I don't know what to say. You need help. I wouldn't touch this company up here. Breakout opportunity, yes. 26 is the target. What is this? Okay. Let's zoom out. It's a great technical breakout opportunity. I shouldn't say that you shouldn't be in it. If you're long for that breakout, kudos. You should know that, look how many times it's failed. What is that, 2 years? 2022? For 2 years, it's been trying to break out. Maybe this one is it. Maybe. I mean, it's $3 to $5 of upside. Make sure you time it right. Look left. Fail, 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 fail. You can consider all of these fails. Fail, 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 fail. Whew. Pivotal spot. Maybe this time it'll do it. Buy the dip for sure. If you're long for the breakout, make sure you're a momentum trader. If you don't know you're a momentum trader, you're probably not. Net. So this is a company that has a solid P&L. Probably is in the right business. Provision of cloud-based services. Of course it is. Buy the dip moment. I think came and left quite a few times. I would build a long position. Check this out. Whatever this is here. I'll delete it. Anyway, so this has been a good base. So put an alert down here. if you're not brave to structure a long from now. Those are entry spots. Yeah, something is going on with TradingView, making my job tougher today. All right, so a breakout from 88 could get you to 100. A dip into 77 or lower is an entry opportunity. A dip into 67 or lower, most definitely. Anything inside this wick or lower, it is a good entry opportunity. Here comes the warning. If the market's correct, I have to mention this because we zero focus on what's going on now and we don't consider it a holy shit moment. And what if we wake up and the U.S. actually has troops on the ground of Israel fighting against Iran or whatever? We're pretty close, so it could happen. I don't think the stock market will hold up. They're ignoring the news right now, but I don't think it'll hold up. The breach of 65, which is the heaviest volume, will get you 45. But that's a scenario of a holy crap moment that has not happened. Okay? So let me revisit what could get you here without a headline of war. So I'm going to focus on the S&P. If we lose the lows of September, you know, the 2-day drop of September, we will probably lose the drop of August, which was more severe. It was a crash in August on 8/5. That was an unbelievable overnight session. If that happens, this one will be below 60. That's my forecast. So don't go all in is what I'm saying. And if you're in, structure some sort of a sold put bought call spread of sorts. If I own shares, I would comfortably sell covered calls. Netflix, great P&L. By the way, yesterday I was trying to watch something and I have access to almost all streaming platforms. I wanted to watch something else. I promise. I couldn't get any other platform to work without crashing. Every platform, including Amazon. Amazon was the worst. The worst. And I just couldn't watch anything. It was like, screw it. I'm going back to Netflix. And I watched all night of Netflix. I just had it in the background doing some things around the house. So it's a solid company with solid technology, and it's the first mover, and I think it still has the advantage. It's a buy to dip. Would I invest in it up here? No. We did an iron condor with it that got tested, but it won. So I wouldn't repeat it because it was set up for last week, 2 weeks ago, and it was by request. So if I would do anything, I would do another iron condor as a trader, but I'm not going to do it. It's too much drama, and I would center it around here. So give it room. But here's the tricky part. It reports earnings soon enough within the next 3 weeks, actually less than 3 weeks, 2.5 weeks. So positioning, they tell me it likes to rally into the earnings. I don't buy into all of that. I would put it on my agenda to buy the dip. So I have alerts. You see my alert? If it falls into 640, 630, I would comfortably sell puts to own it down here. Up here, there's no rush from an investment perspective. I don't know if they meant to say Nova Gold. I'll treat it as such. Everything I said about any other gold company, I'll say here. So gold is breaking records, and this one cannot break a new record for itself just from the picture in itself. So I would say sellers above 460, buyers below 380. NEO, I wouldn't touch it. I believe XP Engineering, so XP EV reports this week. Maybe it moves this one in sympathy. Why? If I were to invest in any EV company, I would only touch Tesla. Only touch Tesla. If you're trading the stock, fine. You're in a breakout, it could get to 8. It starts to be an exit spot from 7 on end. In fact, if you look left, anything above here has been a hard sell. This is a stock I used to sell puts into it at 20 and 18 and 17, and now we're talking $3 and $2. The market is telling you something. Stay away. Nike reports earnings. Everything I tell you now is nonsense. I said it's a blind buy to dip down here. I sent out a note saying there's not enough premium for me to sell puts, but I would have bought half my shares. So I said if you wanted to invest in Nike for the long term, buy half of a position and forget about it. And if you did, you caught an amazing rally and you're going into earnings. And what do? Nothing. You got into it, great, and then maybe it dips back lower again so you can add your second half or another burst of shares. they're selling rallies and making lower lows if you look left. So this is a rally. They're probably going to try to sell it. I think it holds at 75 or 77. So buy the dip below 82.5 or enjoy the fact that you're long already. I would not go long into the earnings. You're taking a lot of gambling. You may make money, but it's a lot of luck. ServiceNow, everything I said about net, I would repeat here. Not a great entry point if you're an investor. I mean, I wouldn't even have it on my to-do list right now. There's nothing you can do with confidence. The confidence entry is below 820. Well, it will never be there. Then buy it. You're asking my opinion. I wouldn't touch it above 820. If I'm a traditional investor, I don't know how to sell puts and buy calls. And that's a massive stock to sell naked puts in. There are tons of strategies that can get you long without any money out of pocket and leaving room for error. Just don't blindly chase. Energy, it was a short. It's a short again on concept, but I think this is a like alternative power, right? Some sort of a nuclear aspect to it that is in the future, not now, if I remember correctly. If that's the case, this whole price action is based on hope. Don't fight it. It came almost to our target and went to the moon. I wouldn't trade this. And if you're an investor, just have the guts to buy the dip next time. Or just buy it blindly, half your position as an investment, and forget you own it. And if it falls back down to 62, add the second half and forget you own it forever. So breakout, 86 was a breakout. Target is probably 110. Oh, no, sorry, 100, 102. So yeah, you have a breakout going. If you're a momentum trader, ride it. Just ask yourself what it's going to take that out. NVIDIA, buy the dip, 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 buy the dip. Did I say it enough? One more time, buy the dip. Okay, so I put 2 words and I'll renew those 2 words. Test 1, they passed it. Test 2, they failed it. 118, 126. This week, if you want the bulls to make a new all-time high on the NASDAQ, you want NVIDIA above 128. Okay. That's it. Buy the dip if it comes. Where? Anywhere around 110 or lower. So sell puts to own shares. You can be long right now. NVIDIA long. Everything I said about NVIDIA applies here. NVO, you can be long with a stop. Absolutely. Look at this P&L. Fake. The risk is, this is a diet drug, right? I think so. Ozempic? Yeah. The risk is, it's P&L. It's at risk from government intervention that changes the given. Like right now, as what it is, oh, hell yeah. Long with a stop, or long half of a position to add the second half at 102. Yeah, solid. You can get 130 out of it. Just be aware that any given day, headline might take it to 150 or 100. I don't know. On semi, not a long here. It looks like it wants to break out, but it looks like it could have one more dip down towards 72 before it does that. So if it dips and comes back up and pops, that would be great. This is a good P&L, although it's drifting lower, quarter over quarter. Just know that you have sellers above and buyers below. I would be comfortably selling puts. I think it's on my list. If not, I'll add it. Hey, yeah, I would sell puts to own shares in this one for sure, especially on dips. ORCL, I wouldn't touch it. The opposite of on. It's an overachiever. Super solid P&L, but look how boring it is. What the hell? What do you mean to tell me it was that much underpriced? No way this is a long up here. No way. So expectations might be too big. So not for me. Shortable, but not. I wouldn't want to be long. Oxy. Okay, so I told you so. No. It's a long here from an investment perspective. If you believe in it, you're long here. Technically speaking, you could drift lower because the rally was super bad. So here's what I would also say. This whole thing was wrong. So assume that it's not here and that the bottom was here. So it's approaching a bottom. So if I sell puts inside of 42, I can do it below 45. I can do it with confidence that it's close to an all-time low. Not an all-time low. Like, this is the freaking pandemic. So this is the real bottom. That's how I would treat this. Selling puts with confidence, knowing that rallies are not going to work. So if it rallies to 57.5, it's going to face a lot of sellers. So this way you wouldn't care if it does rally. You want your shares lower, you may get them. But Nick, I may miss out on the upside. There are things you can do to capture the upside. Come into the live. 24 is your test, and you have solid support to do it. I don't know what this does. Pan American Silver. Oh, okay. I wouldn't touch it. Why? Silver is lagging gold. Now it's trying to catch up, and this one is still not breaking out of its own self. Let me see here. So silver is behaving better than it is behaving to its own self to a degree. So I wouldn't get out of it. I wouldn't start longs here. And if I did, I would make sure I'd do it in a way that it doesn't need a rally immediately to make money, like not calls. If you're investing in shares, I think you should grow more confidence in going long on bad stints. Anybody that don't get me started. Anybody that gets brave on gold, silver, and crypto when it's recovered should take the George Costanza approach. Whenever you feel something, do the opposite. I guarantee you better results. It's guaranteed. It's guaranteed to work better than just chasing your feelings. Anybody now is interested in gold, you should do the opposite. You should start finding a way to go long when everybody else is not interested in gold, which is not here. Silver is the same conversation. So as an investor, put an alert and buy it below 16 or 17. You would do better. Palladium. Okay, I don't know anything about palladium. So it's falling. This stock is falling into long-term support. So anywhere between here and 86, there's a lot of buyers. And anywhere above 100, there are a lot of sellers. Look left. So yeah, you can start longs as it's falling into 88. And this brings us to video 3.